So good afternoon everybody for another edition of Harcourts Monthly Market Update. I've got with me today Brett Holloway from Crowe Horwath. Crowe Horwath are our company accountants, and I thought given the approaching deadline of June 30 it was opportune to get Brett in today and just have a discussion about some of the things that landlords should be thinking about prior to the end of the financial year. So welcome Brett.
Thank you, Peter.
Perhaps we can break it up today into a few different groups. What should anybody be thinking about if they've purchased a property in the last 12 months?
Okay, well Peter, with the end of financial year coming, it's a perfect time to dust out the shoebox, or however you keep your records, and pull them all together. If you've bought a property during the year, you'll need to make sure that you can keep all the documents from the purchase, not just for now, but for also when you go to sell. More importantly this year, you'll need your statement of adjustments and your settlement statement, because you'll have certain expenses in the way of rates and potentially body corporate that'll be prorated in the first year.
In terms of existing landlords, Brett, what sort of things should they be thinking about at this stage?
Okay, so once you've got all your records together, I find the best place to start is with the annual rental statement that you will get from your Harcourts agent. That'll spell out all your gross rent for the year. It'll also show you the agent's fees and commissions, any advertising and costs that Harcourts have paid on your behalf.
And certainly from our point of view, we'll send those statements out in the first 10 days of July, so all of our landlords will receive those statements as a matter of course. What about changes, Brett, that have happened in the last 12 months? I know the tax office are viewing some things a little bit differently regarding residential investment properties.
Yes, Peter, from the budget last year, the federal budget, there's two main changes that have come in from the 1st of July 2017. So these will affect your 2018 tax return. The first one is in relation to travel for residential rental properties. Travel is no longer allowable, either travel, accommodation or meals. The other big change is in relation to depreciation for properties, and more so in relation to second-hand goods. So the days when you used to be able to get a depreciation cost report and then depreciate those assets that were existing with the property, and then the next person would buy it and they depreciate those assets again, those days are gone. It's only for new items from now on that you purchase for your rental property that you can claim for depreciation.
So obviously an owner purchasing a brand new property direct from the hands of a builder, that would still receive depreciation from day one? That's
right. There are rules around that, and in general there's a 6-month window before those goods become second-hand.
Okay, so it's new or near new?
Correct. Yes, something that hasn't been used before.
Okay, yep. So Brett, what about for any landlords that might have sold a property in the last financial year? What should they be looking at?
Well, if you've sold a property during the year, your biggest concern is going to be determining any capital gain or capital loss on the sale of the property. So record keeping is key. So from purchase of the property right through to ownership and then sale, the record keeping is the most important thing. Keeping in mind there are special rules around when you bought the property, if it's pre-capital gains tax, and there's also certain exemptions if you've lived in the property during the time. So I suggest you seek proper tax advice.
Yeah, well certainly that's something we should make very clear, that this is not intended to be advice as such, and if they did want advice, Brett, how could they contact you at Crowe Horwath?
So we're at Crowe Horwath. We're just located to a new building at 909 Sturt Street. We've got a full team of accountants and tax advisors who are ready to go. We can be contacted on 5304 5700.
Fantastic. Well, Brett, thanks for your time, and I look forward to catching up with you soon.
Thank you, Peter.